Setting us up for further gains down the road?
Yeah, I do have to agree. I mean, the market did try and go higher. We did open up and move to the highs of the day right on the open, then just did pare back those gains. We saw a bit of profit taking through the day. Some of the heavyweights on the market pulling down, such as BHP and Telstra. So, yeah, I think it is healthy moving forward if the share market is going to continue to gain. Probably the worst spots on the market today we saw were the materials dragged down by the heavyweights, BHP and Rio. The gold stocks didn't do well after we saw a pullback in the gold price on Friday. And also Telstra and Commonwealth Bank, two stocks that performed very strongly in 2012, were two of the biggest drags on the market today. While we look at the bright spots, again, the iron ore stocks continue to perform well. Treasury Wine Estates performing well on some quotes that it's a ripe takeover target. But what we have seen in the market is a lot of momentum. If you have a look at any of the momentum indicators on the charts at the moment, such as a relative strength index, when this rises above 70, it means that the market's either overbought or is possibly in a longer lasting uptrend. Now, if we look back over 2 years on the ASX 200, there's been 3 occasions over the past 2 years where the RSI has moved above 70 points. Now, does this mean that a pullback's going to come on the market? All 3 of those times, the market has pulled back after the RSI went above 70. If we look at the size of the pullbacks, it was 8%, 19% and 5%. So that averages out around a 10% correction. But really, you shouldn't be looking at an indicator like RSI as your only trading option, but just an interesting note there on the charts.
What about the moving averages, Tim? And we were talking last week that they were looking pretty positive in terms of the technical outlook for the S&P ASX 200. I mean, we're still seeing that likely upward trend?
Yeah, the moving averages are still moving higher. The whole range of moving averages are still moving upwards. Now, when you're looking at like some of these technical indicators like moving averages and momentum type indicators, trend is very important when you're looking at the chart. So when you're trading on momentum, you want to be trading in the direction of the trend. So as I said, even though those momentum indicators like moving averages have been moving higher and the RSI I was saying has pulled back 3 times, if we do look at those times it's pulled back, 2 out of those 3 times the market was still in an uptrend. So really you're not going to be looking for a reversal in the trend probably from these indicators, but they can indicate a slight pullback and consolidation in the market quite well.
The market is open and for the morning session run pretty strong. I think they're up around 3.5%, but faded quite dramatically towards the close.
Yeah, they did. I think we saw a little bit of a decline in like the other iron ore price gains today as well. Fortescue was up over 2.5% or 3% early in the morning. It also pared back its gains as well. But if you look at this at the moment, I mean, a lot of these iron ore miners are really making the most of this soaring iron ore price. You've got Atlas Iron today confirming that they're on target to meet their 12 million tonnes per annum target. A couple of days ago, Fortescue saying they've reached 100 million tonne annualised run rate. So for Atlas Iron, this is for their Horizon 1 project. So they've got already brought one other mine online recently. They've got another one coming on in June, which is going to add another 2 to 3 million tonnes per annum. And really, Atlas Iron shares have benefited from this bounce in the iron ore price recently, and they've performed strongly over the past year or so in terms of production. They've increased their production guidance. They've cut their guidance on costs, and a lot like the other miners at the moment, costs will be key moving forward. They'll certainly be looking to try and reduce their longer-term costs in terms of exploration, and then really try and implement some improvements in their productivity in terms of the resources that they're mining at the moment to increase their margins and their profitability. But a positive for Atlas Iron, certainly their funding. They've got a good debt facility in place there, and that really covers their capex requirements to expand their production out to 12 million tonnes per annum, and this makes them a lot less sensitive to the iron ore price. So while obviously iron ore price key for iron ore miners, and at the moment soaring above $150 a tonne, if it was to come back significantly, Atlas Iron is still in quite a good position to buffer a reduced iron ore price.